Hi guys, it's Burp here and welcome to today's exclusivity report. Giving out a very straightforward kind of outlook, I should say, and acknowledge for two specific instances of major breakout which failed, right? Failed breakouts. We're referring to this one and to this one basically, right? So if you if you acknowledged for it, arguably we are looking at a failed swing, failed breakout, which kind of marked off, the $69,000 resistance, breaking through 65,000, then kind of failing to maintain the main support region, right? Invalidation came with a weekly close below that level on top, right? This is of course this very topish area here instance. And while we are discussing this one, it is actually this far opposite extreme situation where we are looking at a multiple tests, set of multiple successful tests in the past of a support at around 28,800s, only to fail throughout the last week, okay, and managed at the very last minute, last moment, to climb above and establish and another failed breakdown, right? Another failed breakout instance. So the way it works is typically the failed patterns, failed breakouts tend to lead to better performance in the opposite direction than anticipated just based on the breakout direction alone, right? So it means that if you have a symmetrical triangle or even an inverse head and shoulders, if you will, right? If you have some form of an inverse head and shoulder with a left shoulder head on the right shoulder, then if the pattern breaks out to the upside, right, then typically you would measure this head to neckline size, right, as the baseline, the size of the pattern, and kind of like projected now based on a measured rule to the upside in search of projected target objective for the price, okay, equal to the base size measured of the breakout level. But typically if you look at the failed patterns, they tend to actually outperform these kind of like movements in the opposite direction. So breakdown and failure to hold the neckline as a new support actually often leads to further larger sell-off as the investors lose the certainty belief that certain prior support resistance levels actually matter, right? And on top of that, it triggers the cascade of liquidation stops and futures, short squeeze, long squeeze, and so on. So typically, more often than not, you're looking at failed patterns which perform better than the original ones, right? So this way that you same way that you were looking at a pattern that actually broke to the upside and failed, right, at around $65,000, you're now looking at a pattern that basically just failed to break, failed to close below 28,800, the prior support area, and actually confirmed that the entire week, the entire lower shadow for the candle body, which stands out, by the way, for 2/3 of the entire length, marking and classifying that as a clear instance of a candlestick bullish hammer pattern, formation, if you will. Typically, it implies quite a strong demand lying and building under the candle close, right? So this tells me that this has been yet another instance of confirmation for this demand area, right? So demand area, instead of getting a failure, it actually gets confirmed, right? It actually gets confirmed, and as you can tell, there is pretty much a tricky area for where the liquidity grabs happen. Of course, we had also marked it off in the chart, with on the perfect day that Luna and Terra collapsed. You also marked off, this fundamental capitulation which triggered cascade of liquidations on and an extreme pessimism and extreme bearishness on the speculative side, right? So it makes a lot of sense that after a long downwards trend, that had lasted for more than 6 months already, that we would see somewhat of a bullish reaction finally, right? So in this instance of a bullish hammer with 31% body to range ratio could potentially lead to further upside reversal, right? And potentially even reverted back to the all-time highs, right? Of course, this is far-fetched and it's not, the past performance is never a guarantee of future success or future performance, but it tells me that knowing all the principles that failed breakouts tend to perform better in the opposite direction, the weekly hammer, the oversold market conditions, the extreme fear capitulation on the fundamental side, the fundamental trigger that happened and collapsed the markets. There's a lot of reasoning behind believing, in my opinion, that the market is potentially likely to see, not only the recovery, but also if we do manage to actually close above $50,000, to aim for new targets, for new highs. This is my maintained view, right? My overall threshold and invalidation of level for or trigger for the past beliefs that Bitcoin would reach $100,000, Ethereum $10,000, Litecoin 1,000, and so on and so forth, would of course be if Bitcoin had managed to close for the first time below 2,800s, but it did not happen. Instead, it kind of like gave this another display of bullish buyback, below 2,800s, below $30,000. So that's seem to me that we are truly talking about an expanding pattern here, right? So the expanding pattern as an expanding wedge, regardless of the name, this is a sequence of a high, of a low, of a higher high, and of a lower low, right? So this marks it as a broadening pattern. And well, I would argue that if we do manage to reclaim $50,000 area, this could potentially accelerate to the upside, right? So that's my kind of like the most important look into the weekly time frame, which I think is the most relevant right now in terms of the Bitcoin's future, the long-term implications of this very innocent candle close, right? And to me, of course, until proven wrong, which is the weekly close below $25,000, but until or unless that happens, I see Bitcoin pulling back not only to mid 40s, but also above, potentially again bringing new highs because the invalidation, uh, the invalidation condition, the requirement for the bear market, if you will, was not only not met, but it was actually invalidated on its own. It means that the failed breakdown pattern occurred, and typically it leads to fatter and better rally in the opposite direction than anticipated.